All right, good morning, traders. Richard here, and welcome to the Wednesday edition of the Morning Bell. Right, guys, before we dive into the live analysis for today, I am very happy to announce that Ninjacators decided to host another one of their Robot Lab live masterclass events. We had one similar last month. It was very popular. Seats are limited, guys, so if you're interested in attending this, we're discussing the unique proven way anyone can use fully automated day trading systems to go from zero to full-time trading without fear your bots will lose it again. Now, this class will be hosted at, I believe, 7 hours from now, 7.5 hours. It's at 4:15 p.m. I dropped a link there in the chat box. If you want to go have a look at that, you're interested in automated trading, then please head on over to that link. Hit the registration button, fill in your details, and for just attending, you'll also be receiving the S&P 500 Income Strategizer Algo Bot that we have here at Ninjacators for absolutely free for just attending, guys. So if this is something that interests you, please head on over there. If you're watching this video after the actual live recording, then from YouTube, I also dropped that link in the description below the video. So again, guys, seats are limited. It's a very, very, very popular event that we host from now and then. I believe it might also be the last one for this year. So make sure you don't lose out on that. And I think you're in for a real treat. All right, that being said, let's head on over to today's economic calendar. We already had the PPI numbers, price producer index figures that came out stronger than expected. And I think the bigger one for today is at 2 p.m. EST when the FOMC meeting minutes will be released. Then also tomorrow we have those CPI month-on-month and year-on-year figures, as well as the core CPI month-on-month figures. Quite a potentially volatile event. So just to take note of that, these events or news events have influenced the markets pretty big time in the past. So as you all know, everything to do with inflation these days have had quite an adverse effect on the market. So good to know that when that is, and just be careful if you're trading around about those times. And on Friday we have core retail sales, and a preliminary University of Michigan's consumer sentiment figures. Okay, so the big one to look out for today is the FOMC meeting minutes and those CPI numbers tomorrow. All right, let's dive into today's analysis. The ES, as we all know, it's been coming down pretty strong. It's been on a 5 days losing streak. That being said, we previously mentioned that there was potentially a expanding triangle that occurred. I still think that was the end of it. We identified it before price reached the top there. I thought it might actually hit this lower median line, this green line running down to the downside, the same ones that we've been using to track this entire decline that started in Jan. Now, previously, price reacted from this red warning line that runs to the downside, as well as the center median line, which was taken from a longer term pitchfork. Had a very strong bounce to the upside, which failed to obviously move to new highs. At that stage, we thought we were going to see a 5-wave move to the upside. That didn't occur. So in this instance, it was obviously corrective in nature, because price also broke these lows were set in June. Now, price hasn't previously, when it did the small 2-day bounce to the upside, it didn't actually reach this low red warning line. So I still think that if price does move into this area, that we potentially see support step in there. Again, who knows? We might see price just collapse straight through it when these news events come out. So difficult to say. Obviously, we can't say anything for sure in the markets, but I'm currently looking at support around about 3,545. I probably have to update a little bit lower to fall in line with that red warning line that we have over here, around about 3,542.40, give or take, where potential support can step in. All right, and then below that we also have the 50% fib retracement level at 3,475. Now that's the fib retracement level that runs all the way from these lows that occurred in in March 2020 to the highs in Jan this year. Previously, price undershot the 38.2 retracement by a little bit, and then eventually found support and bounced higher. Obviously, that wasn't sustained, sliced straight through it again, and now we have the 50% just below that lower red warning line that the ES might pull into and potentially find support. Before we look at the NQ, I still do think that we're dealing with a corrective structure, i.e. one that's not done just yet, in the shape of a potential A, B, C, W, X, and then a potential Y wave that's currently underway. Now this, if you're familiar with Elliott wave analysis, is what we call a double zigzag, and it's labeled WXY. It's basically two zigzags, A, B, C's, that's joined by a WX axis, and then your Y wave also runs into A, B, C's. So this Y wave here, I think, can become way more extended than this first drop to the downside. This is also why we have a zone towards the bottom side here at the 61.8 retracement at 3,157.48, again from its low in March 2020 to this high in Jan this year, where price might potentially move towards. That's the next support level from a fib technical perspective, right? We also have a little bit of a wider zone here, and again, that zone, if you're first time watching this video, was also identified by also looking at the volume profile from this entire strong move that we've seen to the upside on the ES. And let's just let that load quickly. Yeah, we have the point of control, where the most volume occurred during this move to the upside, right at the 3,328-ish sort of level. So it's an upper limit of this zone. Maybe I must just drop another line in there with a number on it, so I don't have to guess what that number was again. There we go, 3,324, give or take, guys. That price could potentially extend towards if we see another strong decline, but that will obviously only know after the fact if that happens. But for now, we have that support zone. Let me just open this up properly again. Within that 3,542 to where this 50% fib retracement is, around 3,475. On the upside, we have a potential resistance area if we see a bounce to the upside. And now I really have to zoom into this so you can see properly where that is. That lies currently around about 3,682. Now that's just this lower dashed red line that we're seeing here, which is a low red warning line. And just above that, very importantly, we have that center median line, this purple line of that long-term pitchfork around about 3,703. Quite often in terms of market geometry, we call this a kiss goodbye. Quite often see it, and we'll see this when I show you the crude oil as well as gold, how well prices have been respecting these median lines. You'll often see median lines hold support, and then when price breaks it, you get a pull back to it, and then acts as resistance, what we call a kiss goodbye. And that could occur potentially within that zone if price were to move back higher. But again, we might just see another strong continuation to the downside, depending on how the market reacts to these figures or these events scheduled for today and tomorrow. All right, let's quickly look at Nasdaq. Right. Here's a good example of that kiss goodbye sort of thing I've been talking about. I've had in the pitchfork sloping to the upside for the longest period of time. You see price even broke above the boundaries of that pitchfork. Again, just a rule of thumb, drawing these pitchforks, you want to use the three most prominent anchor points prior to a strong move. In this case, a very strong bullish move to the upside. Now, although price did react from this red warning lines, quite often we call the final excursion, that these lines tend to act as very strong resistance in the case of a bullish market. where you see a reaction, and eventually price broke above it, even retested it. So what I'd like to do often is copy and paste that and then use the same channel to the upside, and you'll see that price failed to break or stay above the upper median line of that same angles that we use in these lower pitchfork. So even as price start moving lower, it respected these lines. Well, I keep these lines on my chart, especially if they've drawn from a higher time frame, like a daily and sometimes even a weekly. And you'll see that price continuously follows these, or respects these lines, if I would say. It's probably a better sort of word to use. Similar to what we've seen on the ES, we also sloped a shift pitchfork downwards into the direction of this decline. In the case of Nasdaq, decline already started last year in November. Beautiful example of where price hit the low red warning line by simply knowing what happened in the past and using the three most prominent anchor points prior to a next decline. We had a strong bounce to the upside. There was a confluence area between that purple pitchfork and this green pitchfork line. Right in that area, resistance, price broke down, pulled right back again to a median line. It's what we call a kiss goodbye, a beautiful kiss goodbye sort of scenario that appeared over there. Same thing here on the NQ. Price reached this low median line. It retested it a few times, actually broke above it, and also overshot that by the same distance of where this previous low was. And if you draw a line parallel to this previous low set in June, another kiss goodbye. Straight into it, and we got a rejection back to the downside. Now this was a little zone that we identified before, potential resistance zone. Price did move into it and moved lower. So on the NQ, I still think that if the price was to move lower, the potential support can step in around about 10,306 to 10,581 sort of level. This also coincides with this lower red warning line from where price previously bounced higher from. In this case also on the 16th of June. So still some more downside potential on the NQ. Now whether that will be reached sooner rather than later, again, we'll probably have a better idea of where prices will be heading, especially into which zones before potential support or resistance might step in, and depending on how the markets react to these news events, right? So on the upside, NQ sort of tested the lower dash median line. This one slopes down to the downside, found support, kiss goodbye, broke below it, and very close to this lower 50% red warning line. I know it's a lot of words are sometimes fumble or fall over my own words trying to pronounce these things, but hopefully you understand what I mean. Finding a little bit of resistance at it, maybe a little kiss goodbye again. So 10,973, that's broken to the upside, potentially break above yesterday's high, then we might see another move back into this area where we've seen resistance step in before, around about 11,514, and the upper sort of side of that, maybe even higher again. We'll keep it as that, 11,662. Break below this line over here, and there's not much distance between the current price and this low, 10,715. Potential support, potential resistance, strong resistance up here, and then potential strong support if price would move into this area. I actually have to update this. I think if we do get a drop lower and a break below this level, let me just get that on properly for you, as accurate as I possibly can. 10,726 and a quarter, then we could potentially see that move into this low red warning line, 10,418 to 10,306 on the lower side of that zone. Potential support. Okay. Crude oil, as I've mentioned for a few weeks now, and even since we started this or these sessions here, sorry guys, someone's just making a hell of a noise outside my office. Hopefully you can't hear that. we've been looking at a potential 1, 2, 3, 4, 5 wave move, very zigzaggy, very messy, that to me looks like a leading diagonal. Now, even before price reached this green zone that we marked here, around 76.83 in the lower side to 78.35 on the upper side, we identified that zone simply by looking at areas where we had crosses or confluence between different market geometry lines. In this case, a channel that I've been using and I've had on my chart for a very long time. And that price has been respecting extremely well, all the way to the upside. And here's also that instance where I use the same sort of channel width, or depending if I use a pitchfork, and I doubled it up to upside. Price failed to break above. Well, it did break above it, but failed to close and stay above the upper angular resistance line. Moved down, undershot. But support, moved up, failed to break the high. And at this stage, when price started moving lower, we used again a shift pitchfork. That's also again acted as support, resistance. But it's been bouncing between these angles to the downside from the green pitchfork on the chart here, and as well as finding support and resistance at these blue lines. Alright, so it's very important you use these techniques that you have different angles to work with, and quite often where you have a confluence area is where price tends to find support or resistance depending what direction you're looking at. So where we had, just long story short, where we had this little support area is where we have this lower median line of that green pitchfork and a lower channel line of that blue channel. Where they cross is where price moved in combination with what to me still looks like a 5-wave move. We expected a bounce higher from that area, and that did occur. So I think, when was this? On Monday, we mentioned that price potentially could reach this same angular line of that blue channel between 91.76 and 93.53. It touched it perfectly, went a little bit higher, and then got rejected to the downside. Now, if this was a 5-wave move to the downside, I would, again, as I said previously, expect a decent portion of this move to the downside that started on the 14th of June into the recent low to retrace a decent part of that. Now, that lowest sort of limit of that area of that channel was where the 38.2 FIB retracement level is. All right. If price would break higher than that, I think there's a good chance we can see a move to the 50% or perhaps even a 61.8% retracement. Now, we've just had one sort of a zigzaggy move to the upside. This looks pretty much to me like a potential first wave, second wave, maybe a third wave that ran into that resistance area. Potentially busying you with a fourth wave that might find support at this dashed median line, this green dotted one over here, with potential another fifth wave to follow that could either break these highs or move into the next area of resistance taken from the center median line of that green pitchfork, which you also had on our chart for a longest period of time. Currently lies around 96.10, 96.20ish, give or take. So if we do get a 5-wave sequence to the upside, and assuming that this whole thing is just a correction, then we'd expect a 5-wave sequence with a corrective move to the downside, and then another 5-wave sequence to match this first wave to the upside, assuming that we're going to get that fifth wave. And then at that stage, if this all happens, we could either trade that to the upside, but I still think that this whole entire move to the upside, I think it's got more upside potential, is pretty much what I want to say. But I think it's going to be corrective in nature. It might be quite a while for that to materialize. Things might obviously change, but again, we'll keep a good eye on crude oil for you guys when you attend these sessions, as always, on Monday, Wednesdays, and Fridays. So on Friday, we'll look again at crude. Just know that potential support might step in around about 87.30 or maybe even a little bit lower. All right, just quickly before we look at gold, I want to look at the 4-hour time frame here. I'll just give that a little while to load. So yeah. See, we have this low 50% dash median line there, where I said we potentially might see that fourth wave move to the downside. Now, if you were to reckon that this was a 1 and this was a 2, then yeah, your fourth wave correction typically run into the 38.2 or slightly a little bit lower, measured from your proposed second wave end. So yeah, this could potentially be an area where support might step in. Let me just color that green. Where potential fourth wave might end and then get another move to the upside. Maybe even see divergence between a potential third and a fifth wave high. And I think that will be a strong indication, also depending on which of these lines it reaches again, that we're potentially going to get a corrective move to the downside. I know this does look like a corrective move now, but if you look at the wave sequence at the moment, I think this is just corrective in nature. Again, might be wrong, but we'll revisit crude oil on Friday. All right, quick look at gold. Guys, as always, if you've got any questions, please ask me there in the chat box. Hopefully you've all seen that link to join the Robot Lab live event later today. Let me just get my gold chart zoomed out properly. Okay, so I projected, when was this, last week, that we might see resistance at this area. And this is again a beautiful example of price finding resistance, in this case in a downward moving market, at one of these median lines, and that it will consistently do so until it either surpasses one of these red warning lines, or then you have to change the angle of your pitchfork. So we had a very strong move from a previous area that we identified as support. Price went into sort of the midsection of that area, moved strongly back to the upside, found resistance at an area we identified, and we had a strong rejection to the downside. My projection for gold is that we're potentially still moving lower, and that price might break the lows that was set last month on the 28th. And my thinking still is, in the bigger picture, that gold is correcting in a 3-3-5 sequence, what we call an expanded flat, a very long and drawn out one, albeit very volatile as well. I mean, you also got to consider all the global events, as well as inflation, the strong dollar and all that stuff when it comes to gold. But very, 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 very messy sort of price action, and I think still the only sort of corrective pattern that fits this, and I'm still assuming that this was a corrective end of a corrective move, that all of this is an A, a B, and a C, where your C wave is actually an extension and it runs in 5 waves, what we call a 3-3-5. Now, before we look at the dollar index and finish today's session, if you're dealing with or you think you're dealing with, should I say, an expanded flat, then your C wave should run out in 5 waves, something like this: 1, 2, 3, 4, 5. Now it's around about this time frame that we thought, when price, again, a beautiful example, hit this lower red warning line to the T and reversed higher, that this potentially was the end of that C wave. I did have my reservations though, or my concerns, i.e. that I thought that it was a little bit short for a 5 wave sequence for a C wave, if that makes sense. So since we failed at this area previously, and we made obviously another lower low, this turned into a 1, 2, 3, 4, 5, 6, 7 wave move. It will be an 8 wave move if price breaks these lows again. So my thinking still is, and hopefully this Elliott wave tool works well today, that this was a 1, potentially a 2, and we had a short third wave here. We had a 4th wave, and now we have this very extended sort of ending diagonal looking 5th wave that's still underway. Not unusual for the commodity markets. Gold loves doing this, as well as crude oil to have a fifth wave that's longer than your third wave. All right. So if this is a fifth wave, then we potentially have now a 1, a 2, a 3, a 4, and the final fifth wave lower still underway. So if you have a 1, oh, that's a third wave, a fourth wave. Then you have a 1, 2, 3, 4, and 5 to the downside. I apologize for all the lines on here. Let me just quickly hide that for you. Meaning that we could potentially be seeing the final fifth wave of, at larger degree, C wave nearing an end. Either at this lower sort of area, or at least a break at the very least, I would say, of these previous lows that were set last month, or towards potentially even this sort of area over here. And this is now a little bit of a longer term projection, but again, gold as well can move very fast when you have these important yet very volatile economic news events scheduled, as we're probably going to experience today and tomorrow. So my projection still is that we potentially see lower prices in gold. All right, alternatively, if we see higher prices, we can still find a partner leg for this that will fail to break above this high and then see a move down to the downside later on. But there was a strong area of resistance, and it certainly does look like gold wants to move even lower again. Right, let me just quickly look at the dollar index and then we'll end today's session. The dollar index reacted from an upper channel line that we identified prior to price reaching it. We had this zone that encompasses the upper channel line, this blue line, and this upper median line of pitchfork sloping to the upside. Lies around 114.17, 115.97-ish, all right, give or take. We had a reaction to the downside. The thinking was that might give us some sort of a corrective move back into one of these market geometry lines. Here we also have a confluence between the center median line of that upward sloping pitchfork and a channel line sloping to the upside, the blue one, around about 106.96-ish. Quite a fair distance to the downside, right? But the question has always been, since price didn't reach this upper warning line here, median line, that it could still potentially even do that, and then we get that corrective move at a later stage. Again, all our questions will be answered potentially as soon as the end of this week. And again, dollar index has been flying upwards like a rocket, with the obviously rate hikes that's been occurring, the aggressive rate hikes. So depending on what these FOMC meeting minutes contain today, and whether we're starting to see a visible sign in the decline in inflation tomorrow with the CPI numbers, we should have a better idea of where the dollar index is likely to go, or if we're actually now going to get that correction sooner rather than later. All right, guys, I think that concludes today's session. If you got any questions before I go, then please let me know and I'll be happy to answer them. Again, I did drop those or that link to today's free Robot Lab Masterclass event in the chat boxes. If you're watching this from YouTube or watching the recording, if you couldn't make the live session, then that link is below the video in the description. And perhaps you have enough time, if you do watch that from YouTube, to still attend it. Again, it's at 4:15 p.m. Eastern Standard Time today. So I do think if you guys love automated trading or want to find out more, then that's definitely a class you don't want to miss. All right, there doesn't seem to be any questions today. Thanks very much for watching, guys. All the best. Hope you have a fantastic rest of your day. And as always, I will be... Oh, we got a quick question from JJ. When gold is down, is the dollar index then up? JJ, very strong dollar generally makes the gold go down. And a weaker dollar index can allow gold to move higher. There is that relationship between them two, or inverse correlation, should we say, between the two. When the one goes up, the other one goes down. I'm just finding it very interesting if you look at the dollar index that it reacted from an area that I find, and this is now on a weekly time frame, so very strong resistance area. Now, like I mentioned, we might get another pop in here, and then we see a larger decline. Whereas you look at gold and look at the pattern that I'm seeing, or potentially seeing, as well as those market geometry levels that I've been monitoring, as well as FIB retracement levels and all that, then the pattern also suggests that we might see another move to the downside. If that does happen, then the dollar index, where's the dollar index gone now? Potentially might give us that one more pop upwards. Now this is on a weekly time frame, and this gold is on a daily. It could take a while for it to still reach there. It might happen soon. We'll have to see what these news events, or how the markets react, or investors react to these news events. So it might be much faster that we see that, but it's pretty cool how you're seeing this sort of areas where strong support might come in gold and strong resistance might come in on the dollar index. So both at very, very important support and resistance zones. All right, so if those resistance zones, or on dollar index resistance zone, works out, and with gold being so close to its support zone, then we might see reversals in these markets that could last for quite a few weeks, in my opinion. Right, JJ, no worries. Thanks very much for the question. Okay, guys, I'll call it there. Call it quits for today. Thanks very much for watching. And again, have a good day, and I'll be back on Friday again, same time. Cheers, guys, and goodbye.
Hey, guys. Hey, Richard.
How's it going?
Hey, it's Greg. How's it going?
Good, and you?
Good. Good. Yeah, I was gonna. Jason told you, right? I was gonna come in and take over. Oh, maybe Jason was coming in before, right?